If you've ever taken a loan from a non bank or an NBFC, the EMI is usually auto debited from your account every month. But if you've missed a payment, you know what usually goes down. You're inundated with phone calls from your lender, and maybe agents even start visiting your home. Not an ideal situation for you or for your lender. But now, your lender can actually just monitor your account and deduct the money as soon as it comes in, all thanks to that auto debit permission you granted. You see, earlier only a bank could do this when it lent money to its account holder, but now non banks can do it too. A fintech executive told the Ken that this tool will soon become business as usual in every lender's toolbox. But things are not quite there yet because banks are either not predictably sharing the statement data or their servers are down. And here is where account aggregators come into the picture. These aggregators are a newly created class of licensed companies by the Reserve Bank of India. They basically help businesses exchange financial information about a user after taking the user's consent. Navi FinServe, for example, which is a 4-year-old non bank, is quite particular about how fast it can help its users take out a loan. Navi's co founder and CEO Sachin Bansal, who previously co founded Flipkart, believes that banking should be as easy as going on Swiggy and ordering food. So, to amp up both disbursals and collections, Navi and others like it are counting on account aggregators. But being able to access a borrower's bank statement at any given time is a powerful collection tool. And the problem now is how Navi is using this power. Welcome to Daybreak, a business podcast from the Ken. I'm your host Nigdha Sharma, and I don't chase the news cycle. Instead, every day of the week, my colleague Rahil Philippos and I will come to you with one business story that is worth understanding and worth your time. Today is Monday, the 26th of August. To make loans easy and quick, Navi wants access to some of its borrowers' bank statements, which sounds fair until you find out that they want this access on an everyday basis. This is way more than what other lenders have been asking for, more than what is recommended. In fact, it is more than what is really necessary for monitoring loans. And it does come across as a bit aggressive to many. But for Sachin Bansal, it is plain ambition, especially after Navi was denied a banking license by the Reserve Bank of India. Also, not to forget the failed IPO. He has a point to prove. So, he's tweaking, fussing, experimenting, and doubling down on any metric that has the potential to grow. Anything that will take the company to grow from its $1.3 billion plus loan book of mostly personal loans. And for this, Navi is counting on account aggregators. Since these aggregators went live back in 2021, they saw very slow growth. But lately, they seem to have started picking up with more than 500 financial institutions becoming a part of it. In June 2024, a total of 16 aggregators, which includes the likes of One Money and Anumati, generated over 88 million consents from borrowers on behalf of various financial institutions such as lenders, personal finance management companies, and investment advisors. This was 7 times more compared to last year. Lenders like Bajaj Finance, HDFC Bank, and IIFL are, of course, among the top users of these account aggregators because of their size. But Navi, despite having a much smaller loan book comparatively, also sits among the top 5 users of these aggregators. If you look at the consent form for a loan on Navi, you will see that Navi seeks to keep your bank statement data for as long as 8 years when you're applying for a loan. And if you do get a loan, it wants to monitor it every single day for those 8 years. A senior account aggregator executive told my colleague Arundhati Ramanathan that this is just excessive. Another even went a step ahead and called it unethical. They said just because someone needs money, lenders are exploiting them by taking more data than they need. A former Navi employee told us that lenders can also get away with it easily because most borrowers just want a loan. They don't care about permissions that are being sought or what they do with the data. Now, Navi's overuse of this tool to hoard data is actually etched into its DNA. Details on collections, disbursals, costs, efficiency, and more hit the Slack channel every morning at 5:30. Within an hour, Sachin Bansal is already looking for answers and hunting down drop off rates at every step. Things move really quickly in the company. A former employee told us that saying no is not an option to Sachin. If you say something will need 5 weeks to complete, he will push for it to be done in 2 weeks. He believes in putting everything behind it. This high pressure environment at Navi makes sense when you think about how Bansal, who owns 97% stake in the company, has pumped in nearly $500 million of the money from his 2018 Flipkart exit into it. The idea was for a stock market debut and a banking license. That way, the non bank could have raised funds through public markets and also gained access to low cost deposits. Both of these plans failed. So now, Sachin Bansal is going all guns blazing with Navi's lending business.
Hi, we have an exciting announcement. If you are a regular listener, you would know that the Ken's podcasts have hit many milestones this year. From Daybreak crossing 1 million downloads to the launch of our first ever premium podcast, 2 by 2 We want to keep this momentum going. And for that, we are looking for talented people to join our team. We're looking for a podcast producer to help us produce great narrative-driven shows at the intersection of journalism and business. And we're also looking for an audio journalist who has covered one or more business sectors, ideally careers, education, tech, or startups for at least 2 years. If you fit the bill or know anyone who does, please check out the link in the show notes. And now, back to the episode.
You see, from the lender's perspective, income statements are a useful resource for underwriting and also important to monitor loans. But getting them reliably is a constant issue for these lenders. In fact, ones like Bajaj did not even ask for these statements, and that is because it is a painstaking process for lenders when they are giving out a loan offline. Plus, when borrowers themselves upload their bank statements, they often do not meet the lender's standards. This is where account aggregators turn out to be very useful. They help these lenders pull bank statements and adjust the monitoring period and frequency the way that they want. All they need is the borrower's consent to make it happen, which in most cases comes quite easily. For example, a source close to Bajaj Finance told us that since integrating with aggregators in mid 2023, nearly half of borrowers gave their consent to a large lender like Bajaj Finance. But look what happened to Finvu, a Pune based aggregator which was working with lenders like Navi. It actually got barred by SBI earlier this year. Finvu was allowing lenders like Navi to pull borrowers' bank statements multiple times in a day. This is way more than the once per day limit that Navi now wants. So, it was because of these over frequent pings enabled by Finvu that SBI barred it. An aggregator told the Ken that banks are finding the high frequency of pulls are putting a strain on their servers. They are also upset that their customer is being taken away by another lender. All of this has enabled the push within the industry to check both lenders and aggregators and stop them from asking for more consent for data than necessary. For instance, since May, Sehmati, which is an alliance of account aggregators, banks, lenders, and other financial institutions within the account aggregation ecosystem, has been recommending that specific limits should be incorporated while seeking consent for various use cases. BG Mahesh, the CEO of Sehmati, told us, and I'm quoting, SBI is an active participant in Sehmati's participatory government forums along with other stakeholders. We are all aware of SBI's concerns on this and are confident that this can be resolved with consensus among those in the ecosystem. He also said that because account aggregator usage is on a rise, Sehmati is developing technical solutions to detect deviations, all in the interest of protecting consumers. So, Navi, as much as it needs to go all out to get its lending and collections sorted, should also be careful and not push it too far. Else, it won't be long before the regulator swoops in and does something drastic.
What you're listening to is just a small sample of our subscriber only offerings. A full subscription unlocks daily long form feature stories, newsletters, and podcast extras. To subscribe, head to theken.com and click on the red subscribe button on top of the Ken website. Today's episode was hosted by Snigdha Sharma and edited by Rajiv CN.